Hey, what's up guys? So today we're going to talk about equity securities. So one thing that you should know about this is that it's all about the shares, alright? Meaning that you would have the right, the warrant, or the options to purchase or dispose it at any time and anywhere. So what shares am I pertaining to? So these shares are things like the ordinary shares, the preference shares, and other types of shares. Basically the things that we talked about in shareholders' equity. So what are the things that are not included in equity securities? One of those is redeemable shares because it can be redeemed by any partner at any time, which would lead it to being not included in equity anymore. Treasury shares because it is not part of the outstanding capital stock, and convertibles because same reason as the redeemable share, it could be converted at any time and anywhere, which would lead it to being not included in equity anymore. So how about debt securities? It is the relationship between the creditor and the entity, where the creditor lends something to the entity where it has a maturity date and maturity value. So how do we measure equity and debt securities? As for equity securities, we would measure it at fair value, while for debt securities it would be either fair value or amortized cost. Why amortized cost? One good example for this is when we measure bonds payable, because it includes the principal and the interests, which would be discussed later on. So how about financial asset? How do we measure it? Is it the same as to how we measure equity securities, or is it the same as to debt securities? Well, initially we would measure financial asset at fair value plus transaction cost. Just in case you forgot what transaction cost is, these are the expenses to make the asset bigger, better, or last longer. And this is capitalized as part of the asset. So just to give you a quick example, these are the cost of collection of the accounts receivable, the storage cost of the cash, and other directly attributable costs. And you should be aware that transaction costs can be also called as directly attributable costs. So now that we know how to measure financial asset initially, how about subsequently? So one thing that you should know that it has the same method as to debt securities because it could be measured at either fair value or amortized cost. But the question now is, which one of these methods would be used? That's a great question. So we would measure it at fair value once there's a statement that it is held for trading. 2, if it is irrevocably designated as a fair value, meaning that it cannot be changed anymore. And 3, if it is quoted equity instruments. Once you hear the word quoted, means that it should always be measured at fair value no matter what. So we would measure it at amortized cost. First, if there's a contractual cash flows on specified dates, and 2, if the payments are solely for the principal and the interest. One good example for this one for financial asset is the accounts receivable because it is received in installment and it is paid by the principal and the interest, and as for the liabilities, bonds payable. So that's it for today, Accountaholics, and I'll see you on the next video.